All right, today is the day for dwelling. So we got landlord, right? So let's talk about dwelling, right? So before we really get into it, like what is dwelling, right? So what is a dwelling policy? And if you've been a landlord before and you've been getting insurance policies and you've heard of a dwelling and fire and a dwelling and a DP3 and all that stuff. But what if you're new, right? What if this is your first property and you're looking at, hey, I'm a landlord. Like, what kind of policy do I need? You came to the right place. This is dwelling, right? So, this video is going to cover, everything from, scratch for the most part, but, some of the stuff I'm not going to deep dive 100% into. I might refer you to go look at the homeowner video if you're a little less familiar with, dwelling policies and how it all works. But I'm going to go into enough detail here where if you're not that familiar with it, you're going to be very informed. And if you are, somewhat familiar, you've had them before, this is going to give you, a pretty good deep dive into like what's on it, what the coverages are, what makes it different from a homeowner's, and that type of thing, right? So a dwelling policy could be a couple different things, right? So, it's you renting out as a landlord. You're going to be renting it out. And sometimes it's owner occupied. Sometimes the owner, it's not occupied, right? So, most of the time, I would probably say it's not occupied, right? So, most of the time, the dwelling policies are, you're living somewhere else. You have your own homeowners. And this is like your investment property. It's your secondary property. And you get a dwelling and fire policy for that, right? So let's dive into the policy. We'll get more into details like that as we go. But that's a lot of the questions that you're going to be asked, right? So when you start this process, it's going to be, hey, what do you, what's the deal with, what you're using the property for, right? Like, is it seasonal? Is it, do you rent it out, annually? Do you use a lease? Do you require your tenant to have tenants insurance, which we're going to get into? And, there's a whole list of questions that you're going to want to ask, which we'll get into, right? So let's just keep going with this, right? So you're going to see this on almost every homeowner's policy. They're going to be a big notice that this policy does not cover flood damage or damage from flood, right? And they're also going to tell you, flooding often occurs outside of identified high-risk flood areas. And property owners may want to consider purchasing flood coverage, right? So what is this telling you, right? So on any homeowner's policy, flood is not going to be covered, right? That's not going to be a thing that's covered. And, neither is earthquake, war, things like that are not typically covered on a homeowner's policy, right? Or a dwelling and fire policy like this is, right? So they want to make you aware of that. They want to say, hey, don't miss this page. This is important. We're not going to cover any damage from a flood, right? And then they're also going to take it a step further and say, hey, maybe you don't live in a high-risk flood zone, but you might want to consider because it often occurs outside of identified. So this is the insurance company just notifying you. Oh, I went too fast there. Of the, the potential of a flood, right? So what's this here, right? It's just telling you policy holders may be able to purchase an endorsement to add flood coverage to their existing policy. So you can sometimes just add an endorsement. You say, you know what? I do want flood coverage. You can get an endorsement, or you can purchase a standalone flood policy from a private flood insurance company or the NFIP, the National Flood Insurance Program, right? So they're just giving you the options, right, on what to do, right? So what's next in this policy here? What do we got next? All right, boom, right into it, right? Here we go. We're on the declarations page. So this is the main page. It's going to give you almost all the info you're going to need as far as a snapshot goes. You got your dwelling and fire. Paul's Peace of Mind Insurance has returned for this mock-up here. Now, here's what's going to start to get different, right? So what's different between a homeowner's and a dwelling, right? So one of the main things on a lot of dwellings, unless you do reside there, is the named insured and the mailing address, right? And this is for agencies and producers out there also. Sometimes they could easily make a mistake on this, so they could learn from this video also. If they're new and they're just starting off and they don't want to make these errors. So you got the named insured, you got Paul Tester and Amanda Tester, and they live on 123 Tester Ave in Testerville, right? So that's where they live, right? But their investment property is over here. It's on Dwelling Street because it's a dwelling policy. Gotta love, my dad jokes in there. So we got Dwelling Street as a dwelling policy, right? And it's in Test City, and here we go. So this is what's being insured. This where it says described location covered by this policy, is at the above address. So it would be there unless otherwise stated, which it is otherwise stated right here. So this insurance applies to the described location. So there's going to be no controversy, if this house burns down, that stinks. It's going to have nothing to do with this policy, right? So it's only going to cover Dwelling Street, right? So let's move on. And, we got our typical stuff, the policy period, beginning and end, 1201. We've talked about that in other videos. Hopefully you've seen some of those, but that's the standard time we use. So perils insured against and the premiums, right? So if you remember on homeowners, you got A, B, C, D, and E and all that stuff, right? So you have your dwelling, right? So we cover this in a homeowners pretty much in depth. Just to give you a quick rundown here, the dwelling is going to be the structure of the property, right? So that's what it would cost to rebuild it from the ground up. And this is not market value. This isn't what you could sell it for. This is what it's going to cost, right? So what they do is they'll ask you some questions. They'll do some research on the property. They're going to see what type of flooring, what type of electrical, any upgrades. Did you have quartz countertops? What did you have for counters? Pretty much they just want to be able to rebuild you an exact, as close to possible replica of what your house is, right? Because that's the idea of insurance. You lose something and you want it to be replaced or restored back to how you were before, right? That's why you have insurance, right? So what happens is they'll take all that information that they got from you, they'll type it into the software, and boom, it's going to calculate what the building costs are, the labor rates, transportation, maybe you're in a tough to get area, you're out in the mountains somewhere, or you're out on an island, or you're down Cape Cod at the tip for this Massachusetts, because that's where we are. So, sometimes, you'll see, especially people out in the Cape, they know sometimes there's going to be extra fees and stuff because, a lot of contractors, it's tough for them to get in and out of the Cape, especially on like 4th of July. And, I had to drive out there one time on July 3rd, and that was not a fun experience, let me tell you. So don't recommend it. Try not to drive there on that day. Try to already be there if you plan on being out there for the 4th. But let's not get sidetracked here. Let's keep talking about policies here. So $358,000. That's what it would cost to rebuild this Dwelling Street, right? And that's actually kind of low. Normally you're seeing, other things, right? So higher than that, but that's what this one came out to, right? So let's go over here. Other structures, what's that? So B. So you always think of B as behind the building or just building. That would be an other structure, right? So a shed, a barn, a fence, a gazebo, anything like that. That would be an other structure. And you see here, there is no coverage for that, right? No coverage. So what that means is they probably don't have one. So they don't need any coverage on that, right? So like a dwelling and fire is going to be like a lighter policy than a home. And you're going to see the differences right now because we're getting into it. So, but that's what B would be. So if they had that, then that's what that would be, right? So let's look at C, right? So what's C? That's your personal property. So this is where things start to take a little bit of a turn, for your dwelling policy, right? So personal property in a home we always say, if you're to take the home, shake it upside down, everything falls out, that's your personal property. The stuff that's left, that's your dwelling and your structure of the home, right? So in a dwelling, it's going to be, restricted to your stuff, right? Not your tenant stuff, right? So in this example, they only have $2,000 worth of coverage. So on a homeowner's, it's usually a percentage of this, and it's usually, that's what it usually comes with. So it's usually a lot higher than this, right? So it's going to cover everything in your home that you have, right? So, it could be, 40, 50, 60, 70,000, 30, it could be a lot more. It's going to be a lot more than 2,000, right? So what's very, very, very important if you're a landlord is to talk about renter's insurance with your tenants, right? And you can even require it. So going back to how I started the video is you're going to have a bunch of questions that, whoever's, doing your application for you, the insurance agency or the insurance producer, they're going to ask you a lot of questions. And that's going to be one of the questions, right? Do you require your tenants to have renter's insurance? So that's very important because that's going to affect, different things with your premiums and stuff, because do you require them to have it? If you don't, you want to make sure you notify them, that, hey, look, because, that they don't have coverage, that your policy doesn't cover it. Your policy is mainly there to cover the dwelling. It's called the dwelling and fire, right? So that's what it's mainly there to cover, right? It's not meant to cover personal property too much, right? So why even have this 2100, right? So this is covering your personal property. So let's say you did have a shed and you had your tools in there. Maybe you had your lawnmower in there. You had different things, the landscape, right? So that's all you need it for, right? Or maybe you give the appliances, to the tenants. Maybe it's your stove, it's your dishwasher, it's your washer, your dryer. That's what would be here, right? So that's all that's going to get covered. You're not going to be covered for anything that's your tenants, right? So that's why it's super important that you let the tenant know that, because, you'd be surprised how many people that are renting, especially just think of a young kid, that just moved out of home. They're not thinking about insurance. What the heck do they know about insurance, right? Their parents, they had insurance. The kid never really worried, about what was going to happen if something were to happen. They just figured, their parents' insurance going to take care of everything, right? They weren't worried about their Nintendo Switch and all these different things that they might have had, they're not worried about that stuff, right? They're like, yeah, my parents will take care of me. Something happens, right? They have insurance, if they even thought about it at all, right? So, but now they're out on their own. They're getting their first apartment together, a couple of friends, or, maybe it's a boyfriend, girlfriend thing. I don't know. But, or some other combination, it could be whatever. And then, any kind of partner. And, they're living together, right? So it could be their first time, right? They don't know, right? They think, hey, this thing burns down, my landlord's got me, right? Or this stuff gets damaged. So you got to let them know, you got to notify them that, hey, you should look into a renter's policy because this stuff's not covered. So you got to make them aware. And then, you could require it. You could say, hey, you have to have it. That could be one of your requirements. So, but that's personal property. That's a huge difference with your home. So Amanda and Paul Tester, their Tester Street, Tester Ave in Testerville, they're going to have their own homeowners, and that's going to cover all their personal property. So here it's pretty much restricted, right? And that's the other key, right? So on a homeowner's policy, if you watch that video, and if you have a dwelling, most likely you probably are familiar with a homeowner's, especially if it's an investment dwelling property. And or maybe you don't know, maybe nobody explained it to you, but if you watch that video, you'll be explained very clearly that, your personal property travels with you, right? You're wherever, you're out in the Bahamas, and, you brought your laptop for whatever reason, or your iPad, and, something happened. Hey, you'd be covered down there, right? Somebody stole it, out of, whatever, out of the room. It covers with you. With a dwelling, your personal property, for the most part, is just going to be on the dwelling. Although I have seen that it does follow with you at times. So As much as I just laid into that, sometimes it does go, you will see it worded as like around the world. So, that's why it's tough doing these videos, because it's not always just black and white one way, so, and I don't want to confuse you and give you like 8 million different examples. I just want to try to tell you how some of them work, with that, but sometimes it's restricted, right, to the property. So just something to think about, right? But you want to just check it out for your actual policy, right? So that's the difference with personal property and what you should notify your tenant, right? So what about fair rental value, right? So what's fair rental value? So if you go back and you just think and close your eyes for a minute, you think, okay, what was on the homeowners? We had A, dwelling. We had B, other structures. We had C, personal property. We had D, which was, your additional living expense, your loss of use. And that would be, God forbid, you had a total loss. You had to move out. Hey, tomorrow or tonight, all of a sudden, boom, you got to go find another place to live, right? So you lost use of the home. So if that's at your Testerville address, right? But what's going on in your dwelling street address if you don't occupy there and that you're just renting it out, right? Well, it's the same concept. That's why I brought that up. So you can think of it as the same concept. You're at fair rental value. You're at the flip of that, okay? So you're still losing, it's like loss of use, but what are you also losing as a landlord, right? You're losing rent, right? Because it could be rented, right? So you got fair rental value, which is, you're going to get fair market value. You're losing, right? So you want to be covered for that, right? Because that's something you're losing, right? You want to, in the event of a loss, you want to be restored back to like if, that loss did not occur, right? So that's what this is. It's like just kind of a flip, right? And then, also bringing it back to the tenant on their policy, on their, their HO4, their tenant's policy, they're going to have loss of use. So they're going to be taken care of on their policy. So that's why you also want to encourage it, because that's going to be on their policy. So not only is it going to cover their stuff, hey, if something happens and they need to move out, they should also have some protection for that also. So you can, let them know about that. Hey, you could be covered. God forbid, you got to move, you got to relocate temporarily, because they're not going to pay rent when your place is burned to the ground. Like, why are they going to pay rent for that, right? So they can't live there. They're not residing there, right? So that's what that would cover, right? So it's going to cover both of you. If everything's played out right and they have their policy, you have your policy, then everyone's as happy as can be considering the situation. So, but you're going to have $23,000 for that. And it looks like 1/12 per month. So they'll give you like a 1/12 of that, every month that, you have to tap into that, right? So then we have additional living expense. So that would be kind of like the D in your home, right? So that's if you were residing there, right? So if the same thing, if you were residing there and you had the loss of use and you had to move, then this part would cover you for, you having to do that, right? So, but this obviously this is set up, with this low personal property and nothing here that they, more likely than not, do not reside there, right? So now you have your premium, $1,431. We'll keep scrolling down. Here you got your form and endorsements that make up part of the policy, right? So actually, let's just think real quick before we keep going here. There's something missing here, right? What's missing? Right? We got our A, we got our B, we got our C, we got our D, we got our E. Maybe because there's an E here, it's throwing you off. But what was E on homeowners? Does anybody remember? E. Liability, right? Liability. And that's a huge thing on a homeowner's policy, right? That travels with you just like personal property, right? Liability, right? It's not up here. Interesting, right? Is it part of this? Well, let's find out. All right, back to where we were. Forms and endorsements, right? So here's your forms and endorsements. And this makes it nice and super simple. You got your form. So if you wanted to know what the special provisions were in Massachusetts, you see this number. you'd scroll down. I'm not really going to go too far, but you see these numbers here. This is the DP3, so that's going to be the main form. But, you just look for that, and then you'll find your special provisions and everything with that, right? So we'll get into that when we get down there a little bit. But let's see what else is here, right? So here, name storm deductible. Name storm deductible. All right? This is something that is very easy to overlook, right? Very easy, right? So that's going to be very important, right? And then you have your account credit, which is 10%. So your account credit would be pretty much a bundle, right? If you're bundling with another account, they're going to give you 10%, right? So not a bad deal. So you might want to think about putting this with your home or with your auto and your home, right? Put it all together. The more credits, the better, right? So let's keep going, because I know I just said this is huge and we didn't talk about it yet, because we're going to see it in the next section, right? So, and I apologize, because look, I said the total was $1,431. That's why you got to be careful, right? Even me. Total annual premium, $1,488. Yeah, it's not a huge difference, but you always want to see the total annual premium. That's when you know. Sometimes it's just totals for sections, especially in autos. You see that all the time. But, all right, so here we go. You got your deductible. So you get a $500 deductible. Most likely, if you're a landlord or have a dwelling, you probably have dealt with deductibles before, so you understand that is you just sharing in the risk. You're going to pay the first $500, and then the insurance company will kick in and pay the difference up until their limit, right, for a covered loss, right? So here is where we get into the name storm deductible, right? So you got $500 deductible. In the case of a loss under this policy, we cover only that part of the loss over the deductible stated. Other, except exclusions and exceptions, that's what you want to pay attention to. You got 2% of coverage A for a named storm. So your deductible is $500, except when there's a named storm, it's going to be 2% of coverage A. Well, you might have two questions here. And one, you probably kind of know. I mean, maybe both you kind of know. But what is a named storm, right? So a named storm is going to be when the weather service names a storm. You got Hurricane Matthew, Hurricane Katrina, Hurricane Bob, bringing me way back. I might even said that one in my homeowners video. But pretty much if they name a hurricane, now you have a named storm. So that's something here that you're going to want to look for, right? Because sometimes this might say, hail or windstorm, right? So a hail or windstorm is pretty much whenever there's hail or wind, you're going to have this other deductible here, which we're going to get into how much that is, right? So if it's named, which means they actually name it, that's the only time this kicks in. If this says hail windstorm, then anytime there's hail wind, then your deductible is not going to be $500 anymore. It's going to be this, right? Well, what is this? Let's calculate it. All right. So here we go. We got the calculator up. So it's 2% of coverage A. So what's coverage A? Coverage A is $358,000 times 0.02%. Boom. So your deductible, when there is a named storm, is not $500. It's $7,000, right here, $7,160. So when there's a named storm, that's what the deductible is going to be, right? And this is a lower coverage A. With inflation over the last few years, you're seeing homes a lot more than that. Like, let's say you had a $750,000 home, right? To rebuild. Remember, it's not market value. This is building supplies and, labor and all that fun jazz, right? So 0.02, boom, $15,000, right? $15,000 if this was $750 for a named storm. So that's pretty significant, right? And you might get this policy in, and you just glance, and you're like, oh, I got a $500 deductible, and you just scroll down. You're just scrolling. You don't even do the math. You don't even comprehend this. It doesn't even mean anything to you. You just scroll right by it and look at this. That could be 15 grand. Could be more than that, right? Depends how much the home's valued at, right? So when is the damage going to occur, right? It's going to be a named storm, right? That's when the roof something crazy happens with the roof, right? A tree falls and it's going to be a named storm. And then what? You're going to call your insurance and think, that's all right, $500. Yeah, that sucks. I got a big tree in my living room. But, $500. It's my deductible. So I've been paying every year. I pay on my insurance. I've been paying it for, X amount of years. I know I got a $500 deductible. And then you call them up and the first $15,000, that's your deductible, right? That could be almost the roof, right? That could be almost the whole roof, depending on, what kind of roof you got and how big your home is. But obviously, $750,000 home, the roof's not going to be that. That's for sure. It'd probably be in the 30s, probably 30,000. But anyway, so that is very important. And the same thing with wind, hailstorm, right? So if you see wind, hailstorm, that's even like a little level, that's worse than this, obviously, because this has to at least graduate to being named, right? Just wind and hail every time. 15 grand. 15 grand happens a month from now. Happens next year, right? 15 grand every time, right? So you want to avoid this at all costs, right? So there are some companies out there, and this goes for your home. So let me make sure I make that clear, because this isn't just for dwelling, right? This can be on any policy, right? So I mainly bring that up now because you're probably maybe more concerned about this one than you are this one, right? So, you want to make sure you understand this. And when you see this, you want to know what it means. 2% sounds low, but when you do the math, you might not even think to do the math. You might be like, oh, whatever. So, you want to try to have a number there, right? So, sometimes you might see it, it might be 2,000, or 5,000. And even in that situation, it's still better than 2%, right? Because 2% of coverage A, right? And, what's going to happen the next year, right? The next year, this is going to go up a little, right? Because the value of everything goes up. So when you renew and you just let this policy sit here for years and then you forget about things, this is going up, right? And then you call thinking it's going to be covered, and then you got to go deep into your bank account to cover it. So, you want to do those calculations. You want to understand. You don't want to see wind, hail. You definitely don't want to see wind, hail. You want to see at least named storm if you're going to have that. But you don't want to have that at all, if possible. You want to try to hopefully either keep your same deductible. This is a low deductible. You might have like a $2,500 deductible. And then this might match it, or like I said, 5,000 it could be. I've seen all different ones, but it could be different percentages here too. So it could be 5%. It could be it could be a lot of things. Here's where it gets tricky though, right? So depending on your home, how far it is from the coast, and different things like that, insurance companies might just have policies. So you might not want this. You might say, I don't want that. Like, I want to have a set amount, but you might not have an option, or at least with that insurance company, because that insurance company could come back and say, hey, because your zip code is 32614 or whatever, that's probably a real zip code. I don't know, but sorry if it is, but don't mean to offend you if it is. But let's say, they just say this zip code, whatever it is, sorry, you're within 2 miles of the coast, or you're in this zip code, you're going to get, the only way we're going to offer you a policy is if, this is on it. So it doesn't necessarily mean that they're sneaking something on there and, or whatever. It could just be that, that's the only way they're going to insure you is, that's the only thing that they're going to give you. So you could try to go to another company. You could try to, shop it around if you really are highly against that and see what else is out there. Or you might have to just accept it. It all kind of depends on your property. So, but it's definitely something if you can, not have it. Let's get this out of your way. You definitely don't want to have it. So, but let's move on. I think we spent enough time on deductibles and storms and all that stuff. So here we go. Non-seasonal. That goes back to the questions. Different things like that. It's a Form 3. It's a DP3. It's a number 1 family, built in 1900. This whole thing. So what else is in it, right? So let's just backtrack. We talked a lot there, right? So we got our A, B, C, D, E. Then we said, hey, something's missing. Missing liability. Where is it? Is it on here? Are you covered for liability? All right. So here we go. We got our forms and endorsements that make up part of this policy, right? So here we go. So here's what we were talking about up there. You got your form number, you scroll down, you find that form, you find out everything there is to know about all this stuff, right? The limited fungi, the non-renewal endorsement, special provisions for Massachusetts, which we talked about. Here's your special form for dwelling. So that's important to point out, right? So this is the big one, right? The DP3, just circle that if I could. So that is your homeowners policy, well, your dwelling policy, I should say, your dwelling and fire policy. So that's the main one, right? So that's like the main policy. And then when you have endorsements, that's just making changes to that. So it can be confusing because it's just in the middle here with everything else, but that's your main policy. And then anything that's an endorsement is going to change something in it. It's either going to exclude something or it's going to add something, right? So you may, a normal policy may have, $1,000 for jewelry, but then you have an endorsement, that says, okay, now maybe not even just jewelry, maybe it's other things, but it might say, now you have $5,000 for jewelry, or now you have, X amount for this and X amount for that. So, but it's all based on this. So this is like the main form that, everything else kind of branches off from that. So, but let's look down here, right? So we have premises liability, and then we have personal liability. So here we go. Liability is added by endorsement, right? So you got premises liability. So before I got an insurance, I always thought of homeowners. So let's forget about dwelling for a minute, your regular home. I always thought homeowners liability was like, oh, you need to have that because somebody comes to your house, they slip on the ice and they fall, or, your railing breaks when they're going up your stairs and they fall off, like whatever it is, they fall off your deck, something crazy. You trip and fall, that's what you always think. And you're like, oh, that's what, my dog runs outside and bites him, that's what I need liability for, right? On the premises, right? I never knew, that the liability on a homeowner is covered you, pretty much everywhere you go. So you can be on vacation, you could be wherever, you can be out at the store, you can be jogging down the path, the bike path, or, along down in Newport, you're just jogging and running on the cliff walk and you knock somebody off the cliff walk. No, that's a bad joke. You don't want to knock anybody off that cliff walk because it's got some dangerous turns up there. But that's a nice place to do a little jogging, a little walking. But anyway, let's not get off track here. But that follows it with you, right? So you got your premises liability. So when you're in your dwelling, that's where it becomes more like maybe how you think of it, or at least how I used to think of it, as it's only on the premises, right? So your homeowners are going to follow you everywhere. Here, most of the time, obviously you want to read over stuff because, just like personal property, sometimes personal property just stays at the actual premises, but sometimes it can go with you, right? So same thing with the personal liability. Just find out, right? I would, you think it probably just is for your premises, but maybe it does fall with you. So find that out, right? I don't want to say one way or another on the video how it's going to be for you in your situation. But so now we get into like coverage L, right? Personal liability. So $300,000, if something happens to, somebody on the property, $57. That's it. $57. That's it for $300,000. And this ties into, I know some of the other videos, I might sound repetitive with some of this, but sometimes that's just crazy, right? You're like, it's only costing you $57 to get $300,000. What a bet that the insurance company is placing on you that you're not going to have to use that. Because they're only charging you $57 and they got a limit of 300. Look, limit. They might pay up to 300,000, right? And then look at this, right? So this little personal liability schedule comes with M, right? This one form has L and M. L and M. Hey, that's the network my wife loves, right? So L and M. L and M. But no, that's not really what it is. I'm just saying and. But so we got medical payments, right? Medical payments. So that's 1,000, right? So what's a medical payment? Medical payment is a payment to others, not you. And something happens, and it's going to give you $1,000, towards like a medical bill, right? So what's the difference here? So what and I say this a lot, like, why do you need that if you have that, right? Isn't that the same thing? Isn't it you being liable for something? Why wouldn't you just use this? Well, here's the difference, right? So personal liability usually is going to be, you're at fault, right? And they're proving that you're at fault, right? They're trying to prove that you're at fault and you're liable. That's when you would have to pay, and then that's when you would tap into your insurance with that, right? With a medical payment, you're not admitting any fault. You're just saying, hey, you fell. I feel bad that you fell because of this. Let's make it a little smoother between us. Let me pay for that $1,000 medical bill that you got. It's got to be a legit bill, obviously, that you would need to submit to the insurance company. If it's all legit, then you get, they get $1,000. So, and that comes included for $57, right? Get $300,000 in, you get this, right? And this, you don't have to jump through as many hoops to get, right? So, so that's pretty cool, right? So that's what you got here. You got your endorsements. You got all those things. You got your fire alarm. You get 2%. So when that number was different when I was up there before, and I said the wrong thing. That's what it was. It's that $157 thing that's not up here yet. That's down here, right? So that's the difference, right? And then obviously your mortgagee is going to be very interested because they have an insurable interest in your property, especially if you're doing escrow. They're going to need to have all that information so that they are in the loop with everything going on with your insurance. They're going to need your loan number and everything else, right? So this thing is 46 pages long, right? So we'll do a quick, dive through it. But it's pretty much, you want to find that. You look for that number down there. I'm not going to look too crazy through this. I'm not going to bore you reading line by line down here, but this is cool, right? So here's your dwelling, your special form, and it's your DP3, right? So this is the main form. It's the agreement. It's got all your definitions. This is the contract. Here's your coverages, right? So you got your dwelling. That's what we talked about, and everything that we talked about is in here, right? The dwelling is at the described location. Remember, there could be 2 different addresses up there. The materials and supplies located, on or next to the described location used to construct, alter, or repair, right? So that's something important too, right? So if you're about to put a deck on and you got all your stuff just sitting there and it's right next to the home, and somebody comes and steals it in the middle of the night, you're covered. It's part of the dwelling, right? So that's important to know, right? Now, when it gets into distance, it does have to be like usually within so many feet. You can't have it, too far away and then say that it was taken. But I could keep reading all this, but this is important too, right? So this goes for homes too, right? This coverage does not apply to land, right? Including the land on which the dwelling is located, right? So your insurance does not cover the land. Okay? Nothing here says it covers anything to do with the land, right? It's covering the dwelling, your property, right? Your personal property, right? Not the dirt. I don't know if you want to consider dirt your personal property, but if you do, it's excluded. Just read this line. So your other structures, like we said, that's the other structures. But you want to read, right? Again, it doesn't apply to land. But we do not cover other structures used in part for commercial, farming, manufacturing, rented or held for a rental for any other person, not a tenant, unless used solely as a private garage. So, there's a lot of little things. If you want to know what they are, you just go through this. Personal property, property not covered, right? So they don't cover this stuff, right? Passports, all this kind of thing, right? Animals. That's good to know too, right? And a lot of this stuff carries over to home. So that's why I'm spending more time on it. It's not just dwelling, but you got, animals are not covered. Aircrafts, motor vehicles, right? That's your auto, right? So your home or your dwelling is not covering your motor vehicle, right? And their accessories and that kind of thing, right? So even though that is your personal property, that's not covered, right? So let's go into that. This tells you like additional living expense, any increase in your living expense incurred for you so they can maintain your normal standard of living. It'll be for the shortest time, required to repair the desired location, which we kind of talked about. Your fair rental value. This is where you'll get the fair rental value. Debris removal is part of what you also get with your coverage. Worldwide coverage. So that's really important. So that's your other coverages, right? So you get worldwide coverages. So you may use up to 10% of the coverage C limit of liability for a loss by a peril insured against to the property covered under coverage C, except rowboats and canoes while anywhere in the world. So that's kind of what I was talking about at the beginning, right? So you have, it's typically just on the premises, but what does this say? You may use up to 10% of that, as long as it's a peril that's listed and it's not on a rowboat or a canoe, well, anywhere in the world. So you get 10% of that. So that's pretty cool. Let me see real quick, although I don't want to spend a lot of time on it. Coverage C. So here we go. We cover personal property, usually to the occupancy as a dwelling or owned by or used by you or the members of the family residing with you while it is on the described location. So while it's on the described location. So at your request, we will cover personal property owned by a guest or a servant while the property is on the described location. So that's something to understand, right? So, but they're saying, look, other coverages, they're going to give you worldwide coverage for 10%. Now here, it was $2,100, so you're getting about $210. But hey, covered worldwide, $210 worldwide. So, all right, what else we got here? I'm not going to keep going with this, but that's number 4. Number 5, rental, collapse, all these things, right? So, trees, shrubs, that kind of thing. Fire department shows up, $500. All right, so here's where it gets important here, right? So you got perils insured against, right? So this is your named perils, right? So on a homeowners, there's open perils and there's named perils. So open peril is pretty much, can be anything, right? An open peril, it doesn't have to be on the list, right? If you have a named peril, then it has to be one of the things on the list. Now, even on an open peril, don't get confused. You're still not going to get flood. You're still not going to get earthquake. Even on those policies, you're going to have, it can be anything that happens, but it's got to be, I shouldn't say anything that happens. I don't want to give you too broad of a category there. But, it can be, any type of peril as long as, it's not these. And it'll spell them out for you, war and all these things that'll typically write. But so this here on this dwelling policy, here's the thing. So the A and the B, it's going to risk, as long as it's caused by freezing of the plumbing, as long as, you did your duty to maintain heat in the building, shut off the water supply if you're away, theft of property, not part of a covered building or structure. So, vandalism, what's this also tell you? It's going to say, let's see. I'm not going to look for it, but I know it's not covering you, wear and tear, on stuff. So, smoke and birds and excluded from general exclusions. And then you got your personal property. And these are the ones you're usually looking for when you're looking at the name perils. Fire, windstorm, or hail. This peril does not include loss to property in a building caused by rain, unless the direct force of the wind or hail damages the building, causing an opening in the roof or wall, and the rain, snow, sleet enters through that opening. Meaning, you leave your windows open, and you did that, then you might not get covered for that, right? Something has to break the window, or, the roof has to fly off, and then the stuff goes in, right? So, your canoes, your rowboats, is not included, right? Your trees, your shrubs, your plants, this is all part of windstorm and hail, right? An explosion is covered, riot, aircraft, vehicles, smoke, all these things, will be covered. So, I'm not going to get into all this stuff. Damage by burglars, falling objects, it's your trees, all these things, you're freezing, all this stuff, right? I could go on and on. But here's your big thing, exclusions, right? So this is what's excluded. And what do we got for exclusions? Your ordinance or your law. That's why a lot of times that's an endorsement. So, if there's a new regulation when you're constructing, repairing, demolition, it's not going to be covered. This is excluded, right? Earth movement. That's meaning an earthquake, right? That type of thing. And it's funny because fire is pretty much like always covered. So even if an earth, usually you look at what the first peril was, but even if it's an earthquake and then it's a fire, you're still going to be covered by a fire, right? Water damage, but read it. I don't want to say, I'm just reading this policy. Don't say, hey, Paul said on the video I'm covered. No, I'm not reading your policy. I'm reading a policy, right? So understand that, right? So water damage over here. That's good to know, because that's like flood, right? Flood, your backup in your sewer and your drain. You want to make sure, there's usually an endorsement that's not a lot of money that usually always recommended to get, for a water backup. Power failure, war, nuclear hazard, intentional loss. Obviously, you can't do it on your own, right? You can't intentionally cause a loss. This is not going to get covered. But certain conditions, right? This is the contracts. There's going to be different conditions. Your duties after a loss, you got to give prompt notice. Protect the property from further damage. Make reasonable necessary repairs. Protect the property. All that fun stuff, right? Loss settlement, covered properties. That's pretty much they're settling with the loss, personal property, or the dwelling. Let's see. Yeah, I don't know. All right. We've been at this long enough, so I'm not going to keep going too far. We're only on page 12 here. Let's just go down. So this is the main policy. Let's see what else we got. We got the homeowners or personal liability insurance, lead poisoning exclusion and coverage option. So this is going to get into your lead poisoning. 1978, that's always the big number to remember. Whether you're in real estate or insurance, if it's, built before 1978, you got to you got to worry about lead, and if it was de-leaded and was the owner, make sure you fill that form out. Not to switch over to real estate for a minute, but you're going to have that little form that can cost you like 70 grand in fines if you don't have that little form filled out, So, it says, were you aware about lead in the home and all this stuff? So, but I won't go too much down that path right now. So we got premises liability. Here we go. This is the liability on the premises. Dwelling street, number of families. That's that L and the M. You had the $300,000 in personal liability and the $1,000 in medical payments. If you were to look at that form number, it would be this one, and it would match up with that. Additional insured. So this is one because there's a trust involved. So they have this form in here. The Paul and Amanda Trust. So there could be a trust involved. All right. Now we got a personal liability schedule, and this is just telling you, this is spelling it out for you. A little clearer, and it's $57. What else we got here? Special provisions, personal liability. This is where, they endorse. See how it says the endorsement changes the policy? Please read it carefully. It'll say, when you go to the actual policy, it'll say like concealment or fraud is deleted. Cancellation paragraph B is deleted and replaced by the following. So you go to that section, and now that section B is now replaced by this section B, D, and then, so that's something specific, because a lot of times what these companies do is they'll use these basic forms, across the country. If they're an insurance carrier that does multiple states, and this is special provisions, Massachusetts, they got to change some things to make it apply with Massachusetts, right? So that's kind of where that is a little bit from. So you got your personal liability agreement, the coverages, the personal liability, it goes on and on and on. So let's see, we're on page 25 here. This thing here is 505. Then you got no coverage if you have a home daycare business, so especially with the rental, it could be lead. They don't want children there. That could be a big liability risk. So they're saying, hey, we're not covering you for that. Lead poisoning exclusion, so there's all these things, lead, when you're talking about rentals. So limited fungi. What else we got? More special provisions from Massachusetts. That's deleted and replaced by this. So that's stuff that's important. And what else we got here? So that's page 405, page 505. Now we got where non-renewal endorsement. That's just an amendment to that section. Limited fungi. Update again. Name storm deductible. So this here, in case you didn't read, you didn't listen to my big spiel at the beginning. Maybe you missed it. Maybe you just saw that and you wanted to know. Maybe you got a policy and you were curious and you saw that up there, and then you scroll down here to the number. You said, okay, that's number 86PP 1789. So you wanted to know what it was. And then, we'll go down here. So for a premium credit, we will pay only that part of each loss which exceeds the named storm deductible shown on the declarations page. So the deductible applies in the event of a direct physical property caused by perils of wind, hail driven during a named storm, right? So the wind or hail has to be during a named storm in this situation. So it's either a percentage, or it's a flat dollar amount, and deductible shall apply to any loss occurring during a named storm as defined below. National Weather Service, like I was saying up there, here it is in writing so you can see it. I'm not just pulling facts out of the air to tell you about. And no other deductible in this policy applies to the loss, blah, blah, blah. So, but that's special provisions. Fuel system. That's the other things you got to think about if you have an oil tank and all that stuff. But anyway, we won't go too crazy. We're down at the bottom. Let's see if anything else jumps out. Lead poisoning, residential rental, property disclosure statement. Are the insurers required to cover lead poisoning liability? Dwelling units, or can they exclude coverage of such claims? There is no single answer to this question. But they want you to be very well aware of lead Like, my real estate licenses, when I, Rhode Island was great because I started in Massachusetts, and to get my Rhode Island license, I only had to do one thing besides, pay all the lovely fees that come with real estate. And that was I had to take a lead paint class. That's it. That's all I had to do. It was a 3-hour class, to pay for that class, pass that class. But that's how important lead is, right? So Rhode Island, I know we're talking about Massachusetts here, but, it's big in Massachusetts, but Rhode Island, they're like, hey, you can come over from Mass, but we really want to point this lead out. And it's all about 1978 and that whole thing. So there's a lot of stuff with that. And especially when you get into renting and the different laws and children with lead poisoning. And, a lot of times, family could, it's a hazard, right? For a child, because a child could have lead poisoning, that could be very, very bad. That could result in death, sometimes. So, just normal kids bite things and eat things and all kinds of things. So what does the law require property owners to do? So you know what, since we're on here, let's read this, right? Let's read it together. So owners of residential property built before 1978 in which children under 6 years of age live must have the property inspected for lead paint by a licensed lead inspector or risk assessor. If there are lead law violations, the property owner must have the unit de-leaded for full compliance or brought under interim control. So there you go. Can I refuse? This is a good one. Actually, I want to read this one because this was interesting when I was in the real estate, doing that more full time. But can I refuse to rent to a family with a child under 6 as a way of avoiding my obligation to de-lead? So can you say, hey, okay, I don't want to pay for de-leading. Can I just refuse to rent to a family because they have a child that's under 6? And the law says no. The lead law, MGL C111 S199A, prohibits rental discrimination, including refusing to rent to families with children under 6, or evicting, or refusing to renew the lease of families. So don't get yourself in trouble with this. It's the law. Just de-lead the property, after you get it inspected, right? How do you obtain? You just have to get, a licensed lead inspector and that whole thing. So how do you get one, right? Oh, here you go. Call this number, and they'll help you out. How can I get my property de-leaded and brought under interim control? So they're spelling it all out for you here. So read your policy. You'll learn a lot of stuff. There's a lot of laws of lead paint. When you're buying, selling, disclosures, insurance, here's all the Massachusetts information on lead paint. So, but we've talked enough today about all this. So let's wrap it up. So, hey, that was dwelling and fire, big things, lead paint. We just talked about it. Personal property, usually it's just what's right there. Your dwelling is the structure. You're not responsible for the tenant's personal property. They need to have their own policy, so make sure you let them know about that. Just you can bundle it together, do it with your home, and just understand the difference between the home, with the liability following you everywhere. And you want to look into that with the dwelling because typically it's like a premises liability. You got a dwelling policy, dwelling and fire. That's what it's there for. Cover those fires. It covers a little more. Look out for those name deductibles from the storm with the percentages. And, name storm deductibles. Other than that, hey, hopefully you got a good understanding of dwelling and, look forward to seeing you at the next video. All right. Reach out if you got any questions.